10 years later, the great financial crisis of 2008 still casts a long shadow. And given the stakes, not to mention recent weeks on the stock market, we figured it was time for a crash course from Jill Schlesinger.
Remember those dark and frightening autumn days of 2008?
This is going to be one of the watershed days in financial markets history.
Let's talk about the speed with which we are watching this market deteriorate.
The Dow traders are standing there watching in amazement, and I don't blame them.
It was very scary.
Well, let's get to our top story, the government bailout of Fannie Mae and Freddie Mac.
Who was next? Why are these companies failing?
Lehman, which has 25,000 employees, will be liquidated.
Back then, Gretchen Morgenson was a business columnist for the New York Times.
Meanwhile, Merrill Lynch, fearing it could be next, agreed in an act of desperation to a shotgun marriage with Bank of America.
The banking system was near collapse, the stock market in free fall. And to many, it seemed like government officials were as clueless as the rest of us.
There was just a real sense of being in a dark room filled with furniture that you were going to stumble on and fall over and that you didn't know how to kind of maneuver in. There was so much that we didn't know and that really people did not want us to know.
Morgenson says the seeds of the crash were sown in the boom years leading up to it.
The housing boom is a coast-to-coast story. With that reliable national barometer, the median sales price of an American home rising every year, jumping more than 9% just last year.
Hurry up, don't wait.
Home prices were skyrocketing. Many believed they would never fall.
We're pretty confident that the housing market down here is not going to go down at all. It's just going to go up.
But to keep their monthly payments low, more and more borrowers were opting for risky mortgages.
Out of all the business I do, I'd say probably 75% are adjustable rate mortgages. And out of those adjustable rate mortgages, I'd say 95% are interest only.
And many lenders were stretching the limits, offering so-called subprime mortgages to those with shaky credit, allowing them to buy homes they could barely afford.
There was underlying it this drive for home ownership in the United States that was almost an overarching policy that bigger rates of home ownership was good for America.
Few knew that at the same time, some banks were pushing those untraditional mortgages in order to repackage and sell them to global investors. Pension funds, insurance companies, even other banks bought these mortgage-backed securities.
That is the trigger. That's what sets the bomb off.
Columbia University professor Adam Tooze has focused his historian's eye on a new take of the causes and effects of the financial crisis. He says policymakers were caught by surprise at just how fast it spread.
I don't think they understood the way in which a relatively small bit of the mortgage market, which is what subprime was, how that could spiral into this general crisis of the Atlantic banking system.
Good evening. This is an extraordinary period for America's economy. We are in the midst of a serious financial crisis.
As home prices plunged, millions of homeowners could not repay the money they borrowed, driving down the value of those mortgage-backed securities.
And the banks didn't have that money that they were using to hold those mortgage securities with. They borrowed it.
The result? Taxpayers had to shell out billions to help cover the bank's losses.
We're talking hundreds of billions. This needs to be big enough to make a real difference and get at the heart of the problem.
What do you think would have happened if the mantra of let them fail were enacted?
I think we would have seen a catastrophe of the type we've not seen before, worse even than the Great Depression of the 1930s.
But the bailout sparked fierce public anger.
What do you say to them?
They're very angry. They're even being asked to contribute.
Well, the American people are furious.
Leaving little appetite for then saving what some believed were reckless homeowners.
How many of you people want to pay for your neighbor's mortgage that has an extra bathroom and can't pay their bills? Raise their hand. How about we all?
Swift action may have saved the financial system, but not before $19 trillion in household wealth evaporated, along with nearly 9 million jobs.
In retrospect, a lot of people feel like The banks were bailed out. Okay, I understand that, saved the system. But people were left hanging out to dry. Is there something to that?
Absolutely. There's a huge imbalance between the emergency efforts and the very slow-moving and inadequate measures that were enacted later on to support American homeowners.
Some measures were taken.
This plan will not save every home, but it will give millions of families resigned to financial ruin a chance to rebuild.
They were very slow acting. They provided relief to a small minority of American homeowners in the end, many years after the acute crisis of 2008. And in the meantime, 10 million American families lost their homes.
Ordinary American households, ordinary American families, that's where the real loss is.
All of which made the recovery long, painful, and uneven.
Wall Street today turned back the clock to 2017, another sell-off.
So what about now? Despite this month's turbulence, 10 years later, the stock market is still near an all-time high.
The economy is booming, wages are rising, and more Americans are working today than ever before,
In fact, the unemployment rate is the lowest in nearly 50 years. But many of the new rules put in place after the crisis to protect the system from another meltdown are now being weakened.
What's the danger of rolling back some of those regulations?
The danger is that you have banks which are not able to take the hit of a large amount of unexpected losses and are not able to withstand a sudden panic and loss of confidence when people just want to pull their money out of the banking system.
Well, the banks are much more well capitalized. They have a lot more money set aside for a rainy day than they did leading up to the crisis. But by not prosecuting any very high-level executives who were involved, I think that message was very clear that this kind of behavior, this kind of big risk-taking behavior that risks the entire financial system will not be punished.
Gretchen Morgenson, now an investigative reporter at the Wall Street Journal, worries that failure to hold anyone accountable will resonate for years to come.
I think people get what happened, that this inequality that was, pervasive in the response to the crisis. The very powerful, institutions got taken care of. The individuals who were powerless did not. I think people understand that very well.